Ladies and gentlemen, good day and welcome to Q3 and 9 months FY26 earnings conference call of Time Technoplast Limited, hosted by Kaviraj Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mukesh Purohit from Kaviraj Securities Private Limited. Thank you, and over to you, sir.
Thank you, Palak. Good evening, ladies and gentlemen. Kaviraj Securities welcomes you all for Q3 and 9-month FY26 earnings conference call of Time Technoplast Limited. Today, we have with us the management team, which is represented by Mr. Bharat Kumar Vagheria, Managing Director, Mr. Raghupati Tyagarajan, Whole-Time Director, Mr. Vishal Anil Jain, Non-Executive Director, Mr. Hemant Soni, Senior VP, Accounts and Corporate Planning, and Mr. Himanshu Upadhyay, Senior Manager, Finance and IR. Now, without any further delay, I hand over the call to Mr. Bharat Kumar Vagheria for his opening remarks, post which we can open the floor for Q&A session. Thank you, and over to you, Bharat sir.
Yeah. Thank you, Abhijit, and good afternoon to all my valued and esteemed investors and respected colleagues for your kind introduction to the management. And it is both an honor and pleasure to address you today as present our financial and operational performance of Q3 and 9-month ended FY26, along with our outlook for the remainder of the fiscal year. Our momentum remains strong in the 9 months with the 15% volume growth, 11% rise in the revenue. The gap is primarily due to lower of the raw material cost in spite of considering the exchange rate increased, which is also 3 to 4%, but the polymer prices are down more than that. Despite this, we delivered a solid operational performance, balancing volume strength with the effective revenue management. The CNG composite cascade segment stood over with a robust 23% growth, materially boosting our overall performance with a strong contribution from other composite products. Composite volume increased 21%. Profit after tax rose to 21% year-on-year, underscoring our focus on the capacity increase in the capacity utilization and disciplined financial management, particularly around the finance cost. We are encouraged by the sustained demand for Type 4 composite cylinder, reflected in a healthy order book of around 165 crores. This momentum is further supported by rising interest in our value-added offering, though composite products which include LPG, CNG, oxygen, and other composite products for automotive sector. Our industrial packaging division also continues to perform steady with the confirmed order pipeline of the approximately more than 400 crores for the current calendar year across the both domestic and international markets. Our results reaffirm the resilience of our diversified business model and strong platform we have built for the future. Moving forward, we will continue to pursue new opportunities and accelerate our transition toward the sustainable, environmentally responsible growth that delivers long-term value for every stakeholder. Now let's look over the key highlights for the quarter in the 9 months. In the quarter, the revenue stood to 1,567 crores as against 1,389 crores of the same previous year. EBITDA 236 crores as against 202 crores. Profit after tax 126 crores as against 101 crores. In terms of the percentage, sales increased by 13%, which includes India 10%, overseas 13%. Volume increased 15%. India 13%, overseas 17%. EBITDA increased by 17% and PAT increased by 25%. In the 9 months, similarly, you will see that the revenue increased to 4,433 crores as against 3,092 crores. EBITDA 655 crores in the 9 months as against 575 of the previous year same period. Profit after tax 337 crores as against 278 crores last year. In terms of the percentage, 9 months, as I mentioned in my remarks also, 11% sale increase, volume increase 15%, EBITDA increase 14%, PAT increase 21%. Now, share of the business is also increased in terms of the value-added product, grew by 17% as compared to 9 months previous year. Another thing you will see that the share of the value-added product also is 30% from the total sales in the 9 months, which previous year was 27%. India and overseas business is also increasing because growth is higher in the overseas market, and overseas we do only the packaging product. And so therefore, the business level-wise, I can say India business 64% and overseas business is 36%, which represents the 10 countries. EBITDA margin in India and overseas almost same, I can say. There is hardly difference of 0.5%. India EBITDA margin 15%, overseas EBITDA margin is 14.5%. Net cash from the operating activity is quarter on quarter is increasing. Now in the 9 months, it is stood at 332 crores. And I am pleased to tell you the total debt in 9 months reduced by 380 crores, including the payments made for the QIP funds. And now the total debt as of in the 9 month ended is stood only 266 crores as against 647 crores. So I think it can be very clear visibility is there to have a company debt free in the next 6 months time. CapEx in the 9 months 177 crores, which included 80 crores regular maintenance CapEx, and the balance is regular maintenance, automation, re-engineering, and the expansion 97 crores. And this mostly of the capital expenses are on account of the value-added product where the company has a higher margin. So I want to draw your attention to a couple of things which is the process were taken in the last quarter and further planning and the projects which were undertaken time to time. So I will just tell something brief. Now, for example, sale of the non-core assets which 18 months back decided 124 crores, now only 37 crores value is remaining. That also company is in discussion and would like to utilize, or it will be liquidated in the next 6 months time. And that fund will be utilized for value-added products and expansion and brownfield expansion. Now, in the QIP matter, it is already reported in the month of February. Once again, I will give you highlights. The QIP was 800 crores, which is subscribed. I mentioned last time also around 940 crores was subscribed, but company accepted 800 crores, and the issue price was 201 rupees 12 paisa. Fund utilized as per the object, which is controlled by the care rating agency, which is appointed for the monitoring agency, and that report separately monitoring agency is submitting, and yesterday for the quarter 31st December already submitted. 800, which is original allotment, original money received, fund utilized 340 crores, balance for 60 crores, company is lying in the FD account, which is also the consideration is available on the NSE and BSE site. The management is focusing on the ROC, which 3 years back it is decided. Company ROC when 14% was there, it was decided the 14, 16, 18 and 20. So company in the last 4 years working on the direction only. 14 to 16 achieved, 16 to 18 achieved. Now is this year's targeting to 20%. Already in the 9 months it is 18.6%. And we always know in the last quarter company do business of 30% of the overall estimated business. So for 1 week side, quite short, it will be 20% targeted. It will be around that company management will achieve. Now, another thing company has taken in the last 12 months, I can say, consolidation of the production and the manufacturing unit, that to reduce the operational cost and to consolidate the products to use of the people at the one place, specialized people. So that process is on already, consolidation manufacturing unit and brownfield expansion that will continue. As far as green energy is concerned, yes, the electricity consumed by through of a solar power, especially states wherever the government is allowing, wherever the power companies are available, As I have mentioned in my last call also, as per the India, the requirement of the 15 crores units, all of the in India, which is growing by 15%. If at all the states, wherever we have a presence, if I get the solar power 75%, then company can save substantial amount, maybe 40-45 crores annualized, but it is not available. Currently, the purchase power facility is available in Karnataka, it is available in Tamil Nadu, it is available in Maharashtra, it is available in Gujarat, it is available in Uttarakhand. So, company has signed the agreement wherever this facility is available, and I am pleased to tell you now from this month, Gujarat, where we have a major facilities, the benefit has been started. But I am sure in the next 6 months' time, as we are in discussion, Maharashtra government is also, policy is already there, so we have already signed the agreement and we are going to get benefits in the Maharashtra units also. But certainly, the visibility is there, at least for I can say the 26-27 company will have a power benefit on account of the power benefit will be approximately 10 crores rupees, where the investment is almost equivalent to 1 year saving only. So that benefit, next 14 years, the cost-free benefit will be available because the power benefit will be available for more than 15 years. Then another thing, certain products which company had under development has taken, which is progressing very well. For example, I can tell you, the fire extinguisher, yes, I am talking since last, I can say the 6 to 8 months. Now, I am pleased to tell you both the products of 6 kg and 9 kg is ready, and that will be the commercialization will take place from April 2026. CNG cylinders, yes, presently we are manufacturing 156 liters, but we are ready with 250 liters. You will very shortly heard that 250 liters CNG cylinders ready, so that number of the cylinder in one casket will be reduced from 60 to 36. That will be the more cost competitive and per liter cost will be reduced. And the substantial saving will be there. So you will heard very slowly in the next 45 to 60 days time about this approval. The company is ready with their products. Another oxygen cylinder, already we have mentioned, we got all the approvals for 2 kg, 4 kg, 9 kg and commercialization has already started. Hydrogen cylinder, we have submitted approvals for hydrogen cylinder used in the drone, and if anybody would like to visit the drone operation by the hydrogen cylinder, company owns one drone which is lying in Silvassa, which is 140 kilometers from Mumbai. They are free to see that drone working on this, working by hydrogen cylinder, so they can see how this 8,000 meters drone can fly, how the weight of the drone is reduced by using the hydrogen cylinder instead of the battery use. Another thing, one of the subsidiary company, Powerbuild Batteries, have developed the battery, e-rickshaw batteries, and another that recently signed the contract for which battery we have signed that? Advanced VRLA batteries for this data center, which has a very high potential, and the international company, listed company, their contract have been signed. That is also we have updated on BSc and NSC site. So there's a lot of opportunity, composite products, and these all products are available. Now, because in the gradually way, many times we told how the company will grow. Now the greenfield composite product, I am pleased to tell you and giving you certain background. Currently composite cylinder which were manufacturing in Daman, where the capacity is only 36,000 cylinder, where I can manufacture 400 casket. Now, expansion took place 2 years back, and I am pleased to tell you that expansion is now on completion stage. Erection, installation, plant and machinery is already begin. March it is going to be complete. Commercialization will take place from April because erection and installation is going. So, at one place you will find a company can generate the revenue of 800 crores in the 2 years time from the new plant after the consolidation of the existing plus the new expansion facilities. And on this plant, the hydrogen cylinder will also be, we can make from this plant itself. Another, we have made one separate subsidiary, and 6 months back we have announced, and is a part of the QIP also, because compliance with the statutory. Government is also would like to have a pollution-free recycling for the packaging product made compulsory. So company has formed a separate company, Time Ecotech, and in that company, it was a part of the QIP to have a 3 locations recycling plant beginning with the western region. So I am pleased to tell you, first plant commissioning is ongoing and it will be ready in March and will be operational from April 2026. So company will have own recycling plant to can maintain their quality standard as per the need of the Indian Institute of Packaging for the packaging product. Another facility company has taken automation, which is also, automation is very clear, day by day, cost of the manpower, power, operation cost is including. Nowadays, we have to think out of the box, and automation is must for the cost reduction and make our product more competitive. So, in automotive IBC manufacturing facility, Silvassa is already operational phase 1, but the larger facility also, phase 2 also will be there, that is target taken for the 26-27. But phase 1 is ready with a fully automatic plant for manufacturing the IBC with a very high capacity, which can have annual capacity of 150,000 pieces. Another thing, PE pipe. Company has consolidated one plant is having in Gumri-Pundi, that is 40 kilometers from Chennai. In one location, manufacturing, packaging, pipes, everything. So, better utilization of the assets, better utilization of the space, increase the productivity. Company has expanded, new building have been constructed for 40,000 square feet, that's completed, and that plant is operational now. So, which will give the benefit of the manpower skill specific plus space utilization better way and consolidation of the product in the specified area. And this is the expansion which I have told to India, which have been completed and near to completion in this 25-26. Now I know what is also, I am pleased to tell you, the place called Georgia, USA, company completed this plant and already in operational. And it is in USA. I mentioned in my last call also, the tariff, nothing to do with our company because we have a manufacturing location in USA and supplying for the local in USA. So tariff has not affected any of our revenue in the USA. They are growing 10 to 12%, growing because they are the locally supplying. Another plant which also we have identified to be completed in 26-27, you know very well, I have already explained, company has a ready projections to grow 15% for the next 3 years, which includes various segments of the companies, where the higher growth will be from the composite. But something I will highlight you, and I have given in my earning presentation also the segment-wise where the growth company is projecting. So to achieve the projection now, I am pleased to tell you in Gujarat, company got the allotment in this month, plot area of around 3 acre land already allotted. Agreement is under process. That plant expansion for the next 26-27 for the packaging products and the other products wherever time to time requirement, because 3 acre area is good enough to take care of the company's other products. Another, looking to the infrastructure development in Odisha especially, company got the allotment of the government leasehold land. It is ready. Company is in process of completing building plan, order of the plant and equipment, etc. So they can take the benefit of infra requirement, especially P5 business in the Odisha region. Another is Maharashtra. You know that Maharashtra now, government is fixed, everything is fixed, government changing the policies, easy the policy business. One of the subsidiary company, Technoplast, 75% owned by Technoplast Limited, has already allotted land in Chiplun, place called Maharashtra for the packaging business. It's almost 5 acre land, is more than 5 acre land is there. So already submitting the building plan, and there has a plan to manufacture packaging business, especially valued product that is called IBC. And Chiplun is a fully chemical zone where most of the big chemical companies in the Maharashtra are situated there. So in packaging business, we already explained you, cost of the logistic is the main important cost. You should be near to the customer to reduce the packaging cost and timely delivery to the customer. Now, growth drivers, because in many my conference call, in many of the meetings, people ask what are the growth drivers of the company. So I have just divided my growth drivers into 4 regions. Like packaging company which is a 75% business, packaging product which includes drum, jerrycan, paste and IBC, which company is estimating growth of the 11 to 13% range, because overseas is more than 13%, India is 10 to 11%, so range is 11 to 13% growth we are projecting for next 2 to 3 years. Especially composite product, because expansion has taken place, product development has taken place. Composite which include LPG, CNG, hydrogen, fire extinguisher, etc. and auto-related products, which is 25 to 30% growth projection is there, and for that company's capacity already expanded, which is completion in this Q4 of the FY26. The pipe business, I mentioned to you, Odisha is there, China is there, already existing capacity, company manufacturing pipe in Silvassa, Hyderabad. So there is a growth potential, looking to the development policy, looking to the government infra-related activity, government, I can say, the water management system improving, road construction activity, because this P pipe which is used for the water management, sewage management, drainage management, power duct lines, smart cities, various applications. Then I can say this gas pipeline, which is government is also planning to increase the gas pipeline, supply of the gas. This also we got the approval, which already we have updated. Company now got the approval for the gas pipe manufacturing facilities also. And other products which is very small percentage terms, 10 to 12%. So all put together, I can say the consolidated growth will be above 15%. That is the projection is there. Then again, okay, revenue growth I have explained to you, but at the same time, what are the growth drivers of the EBITDA? Because EBITDA, which is currently ranging from 14.5 to 14.8%. Now, to increase the EBITDA margin, which will finally increase the ROC, which company is targeting 2% year-on-year increase, and PAT increase is there finally, because everybody is concerned what is the net PAT company has earned and what is the dividend payout ratio what the investors are getting. So therefore, company decided increase the efficiency, like automation, consolidation of the molds, machineries, centralized systems of the material conveying systems, high productivity machines. Another thing, power cost reductions. Another main power cost reduction by doing the automation, using the latest technology of the robotic technologies. Power cost by way of using the solar power. Another big thing which will also give some benefit, finance cost, because company has repaid the debt, and further in the next 6 months time, it will be paid entirely. I am just would like to clarify. You will see in the last 3 to 4 years, the finance cost is the range of 90 crores to 100 crores, which is slowly reducing now. And after the debt repayment, the finance cost will be in the range of 25 to 30 crores annualized only, and that is on account of the use of the non-fund-based facilities, export documentation, import documentations, bank guarantees, LC's cost, that only will continue. So that will give the substantial benefit. Another company is to improve the ROC, the working capital cycle time. If I go back to 4 years back, the working capital cycle time was 120 days. This is now reduced to almost 98 to 99 days. And the next 2 to 3 years time, it is targeting to reduce to 90 days. And that is also very clear how it is possible, because the 65 days inventory, 70 to 75 days is the receivables, and the 40 to 45 days is the creditors. So net working capital time company is targeting 90 days. Non-core assets, already I have explained to you, the balance assets, that also will be liquidated. So most of the things which I have covered, if anything left, I am now leaving for the answers and questions. I tried to giving most of the information in my earnings presentation. Okay. But again, I am leaving for you. If any specific questions, I am willing to answer. And if there are any questions which has some calculations, which have some return, they are free to send their mail. We will send the reply by the mail. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jatin from Swan Investments. Please go ahead.
Good evening, sir. Am I audible?
Yeah, Jatin bhai. Yeah.
Good evening, sir. Thank you for the opportunity. First of all, congratulations on the good set of numbers in a current scenario. So, on the composite product, now when our capacity is going to expand by Q4 of FY26 and there will be consolidation of the product at one place, so with 30% of the value-added product which we are doing in 9 months, when you do 800 crores of incremental revenue of composite product, what sorts of value-added product contribution one should expect over a 2-year period?
I think currently, if I remember, the 27% is the value-added product is there. Composite, how much? 27%. We are targeting overall growth is 15%, but value-added product will reach to 35% in the 2 years' time.
Okay, 35%.
Yes, and again, you know very well, the margin in the other products and composite product is different. In the standard product, in the range of 12 to 13.5%, but the composite products and the value-added product margin in the range of 17 to 18%.
But sir, the margin in the hydrogen and the firefighting cylinder and 14.2 liter cylinder will be also better margins compared to the average composite products, right?
Oh, I can say the same range because I'm telling you, I believe in the two things. One, you want volume or you want small volume. I believe in the volume. But if anything is a high volume, then you will be able to, whenever, if your volume is increased, you can negotiate better with your inputs and you offer your product. Now you know the fire extinguisher very clear. I have to offer my product as against the metal fire extinguisher. Yes, it is a lightweight, long shelf life, easy in handling, that all benefits there. But at the same time, people would like to see, not everybody will like to pay the additional cost of 10%, 20%, 30%. But if I will say the fire extinguisher of the metal cylinder is 2,000 rupees, composite will be 4,000, people will little think. But 500 to 100 rupees, everybody willing to pay more because of the advantage of the product. So, I'm very happy. We are very happy to earn. We don't want to, if I tell you, if anything, margin over and above the 18 or 20% EBITDA margin you are keeping, then you are inviting your competitors.
Right. And sir, on the costing,
you should have a reasonable everything.
Yeah. So on the costing front, just wanted to understand, you indicated that next year we'll get the benefits of the power in the range of 10 to 12 crores. But
Yes.
with the consolidation of the product at one place, the automation and the re-engineering that we will be doing in FY27, what sorts of overall cost benefit one can see on the company level?
I tell you this way. You know very well, if normal way everything is running, then you know, in case of the manpower cost, you will have to give the incremental cost of 8 to 10%. At the same time, I want like to reduce that. At the same time, I don't want to leave away that people also. So whatever my new plant is coming, I will exhaust that people in my plant itself. I will not give the recruitment of the new people. But that, for example, I have explained last time also. For example, I am doing the investment, I have explained you that one machine called 2,200 tons, I have invested 25 lakhs rupees in my robot technology and I am able to save 60,000 rupees a month, which gave me the saving of 40 months equivalent to I am saving now. That is the one example I have given for 2,200 ton machine. Similarly, for example, 1,000 ton machines. There also I am incurring 60,000 rupees per month on account of the free labor in each shift. But I have to incur 15 lakhs rupees only for my robot technology and software technology. So there the payback period may be the 25 months. So we have worked out the average in my blow molding, injection molding everywhere. Therefore, you see in my QIP portion, we have put the automation, cost of the automation, everything is around 75 crores. So that benefit will come in the 3 years' time now. Yes. 3 years' time means it will take 1 year in completion and 3 years payback period, so entire 4 years. For example, 75 crores I am investing and payback period is 4 years, including the investment period. Then you can see 20 crores EBITDA margin will be on account of the automation, we will be saved by way of a manpower cost.
Sure, sir. I mean, that's a good amount.
Similar working in power also. For example, in Gujarat, my requirement is 4 crores unit. If I am saving 2.5 crores rupees, 2.5 rupees per unit, the saving will be 10 crores. I am investing 10 crores as equity. That will come back after 15 years as a face value. But as a management, I am presuming I will not get that by 15 years, I don't know. But my payback period is 1 year only.
Oh,
so Gujarat is common this year. So if visibility is there, next year, sure, 10 crores on account of the power benefit, I can earn more. So the normal EBITDA, for example, you know, this year EBITDA, overall EBITDA range will be around 900 crores. Now, you know the percentage by 15 to 20 basis point every year increase because the composite product percentage business is increasing. Legacy business where the EBITDA margin is this. So when this 20 to 30 basis point is increasing on account of the change in the composition of the product, similarly you will see 10 basis point on account of the increase in the manpower, power and other administrative costs on account of the consolidation of the business. Another thing, I have no need to borrow any money because for the automation, for the expansion, company has already accounted money and that money is lying under the escrow account that is only to be incurred in the next 6 to 8 months time because every automation will take based on the experience, based on the cost saving, time to time, even project is identified, machine is identified, location is identified. So based on that only, that QIP amount which is raised, whatever repayment was required that have been done, balance have been kept the escrow account, wherever the need, that automation, recycling plant, the process is on. So, if you see the visibility, yes, after 27, 28, you will have a complete visibility on account of the manpower cost, on account of the power cost, saving of additional 25 crores EBITDA annually.
So thank you for the detailed answer. So second question on the recycling, I mean now that's a need of an hour and we are probably doing 54-55 crores of the capex on the recycling at the 3 units. So how shall one look at the viability of this particular project as compared to the existing 14.5-15% business?
Yeah, I tell you different. Therefore you know that it's not in Time Technoplast. Why I have kept a separate company, Time Ecotech? Because Time Ecotech I consider as a separate company. As a Time Techno, I am investing 75 crores in that project. Now the 75 crores, I should have a ROC of 20% more than that because I don't want to go below that. I am telling you, if for example today virgin raw material prices are 100 rupees a kg, right? Now, I will buy the recycled drums from the market, I will appoint the agent, my cost of the buying may be 65 rupees a kg plus. I will have a 12 to 13 rupees kg, my cost of the power, manpower, machine cost, everything. So I will definitely work down in such a way that company will earn a separate because they will give whether customer is concerned is the statutory compliance for both. If I am using a recycled material, okay, I don't need to give my price reduction. I am obliging my customer. Because ultimately it's the obligations of the chemical manufacturers companies also. So he's not asking for any price reduction. They are asking you should use the PCR material. I'm using that. So he don't want any reduction. So as main company is earning 15% EBITDA, so that Time Ecotech will also earn 15% margin and cost basis they will supply to the Time Techno. That will be the cost and then the product will be supplied to them. So as a separate is the profit center separately.
Right. And so last question before I come back in a queue. So So just wanted to understand your thought process on the flexible IBC, which you are talking since last couple of quarters. So what is the scenario out there? What is the growth roadmap out there on flexible IBC? If you can throw some light on that.
But I am just telling you that the revenue figure, EBITDA figure, not accounted anywhere because I remember very well. We have signed the in-principle agreement. We will review, we will do the due diligence. Yesterday we discussed our board meeting due diligence for the 6 months because we signed that agreement of the in the month of August or September somewhere. So quite data is encouraging. And as per the company projected, they are going to have a business of 250 crores annualized business. We have seen 9-month business. Yes, it is on par. At the same time, my boards are giving me the comments. We have a timeline to confirm the deal by March 2026 because first we have seen the 6 months data for them, that is from July to December. Now my board yesterday, certain comments were there which we are going to discuss with the management of that company's name called Ebullient Packaging, which is an unlisted company having their manufacturing plant in Vapi and Silvassa. And yes, I remember that the flexible IPs is a good market. They are doing 60%, they are doing product export and 40% locally. Good business clientele they have. Some of the common, I can say it's a packaging business only. And that business is also growing 25 to 30%. That money still is lying under the FD account because it's taken under the general corporate purpose. Because on the day of the QIP, it was not identified specifically for inorganic growth, but it was part of the inorganic growth. Therefore, that amount is taken. But finally, we will announce after getting the final due diligence report and everything before March. We will do that. So that process is on. We have a timeline up to the March, and that also can be further extended, subject to the due diligence compliance and everything. And we have that timeline, and as time comes, we will announce that deal. But yes, it is on.
Sure, sir. Thank you, sir. And all the best. I have more questions, but I'll come back in a queue. Thank you.
No problem. No, Jatin bhai, you are welcome always. You know very well. If you cannot come in the queue because of the long queue is there, you are always welcome to the office and get your clarification in time.
Sure, sir. Thank you for that response. Thank you.
Yeah.
Thank you, sir. The next question is from the line of Dhananjay from Alchemy. Please go ahead.
Hello, sir. Congratulations. Good set of numbers. Just wanted to ask you a couple of questions. In this drone you mentioned, have you got any approval from any customers for using our cylinders, and how is that conversation going?
Mr. Dhananjay, this is the pilot project we did it. If you recall, 60 days back I told, we have imported entirely fuel cells, cylinders. We made it.
Yes.
We have tied up with company, Drone Shark, what is the name of the company? Drone Star, that he will make the drone for us. So we have signed the contract with him for the 3 years in the confidential agreement. And I am again clarifying you, we have no any plan to manufacture drone. No, just I am coming. As far as this drone is concerned, we have made one pilot project so that whoever customer would like to use the hydrogen cylinder for the drone, they are very welcome to my plant. They can see how the cylinders are useful, what is the capacity, because we have a particular, as on today, we have developed a particular size of the cylinder and for the particular drone application. Various types of the drones are application, various sectors using the drone. So, still, that commercialization will take place next year. But yes, as I mentioned, this year our commitment was to have our own drone ready, and that is visibility is there, and that we have submitted our video also, how it is benefit, what are the benefits of using the hydrogen cylinder instead of the batteries. That is the benefit, and that available now. I can say, you will come to know as the commercialization. You know that if somebody wants to the hydrogen cylinder, I can't give it because I have a limited capacity. I mentioned to you in the March 2026, my plant is commissioning. We will be ready for the hydrogen cylinder, for the expansion, any new requirement comes, or the automotive supply in supply of the CNG cylinder for automobile industry also will be ready after our expansion. So from April 2026 we will be ready. Then we will approach. Now we have a capacity and we supply them. Till now, our objective for this year was to keep ourselves product ready, and as the expansion complete, we will be able to supply. Because if today somebody will come to me, I will not able to supply it because I don't have a capacity at all. My capacity is full.
Sure. And so one more question is regarding your PPE plant. In what capacity will we be by the end of the expansion, and how is demand shaping up on ground?
No, PP?
For your plastic pipes.
Plastic pipe, okay. I just give you the business of the PE pipe. Currently, we are manufacturing PE pipe in my Silvassa location in the western region. Southern region, we are in Hyderabad. Then we are in Gumripundi near Chennai. And another plant is available in my Kolkata from the eastern region. All current business for the existing investment, we can do maximum of around 450 crores. Current utilization is almost around 70% is there. But the expansion, we know that India, the last, I can say the 4-5 months, the financial government has started timely payments. Infra business is growing. So definitely looking to the government infrastructure development, we have invested in the Odisha, where the land owner, the plant will be ready this year, so it will be available for next year only. But yes, this business, current capacity itself is available for 20% growth for the 26-27. For example, this year, suppose we are closing around 350 crores. So almost if I take 20%, then I have a capacity available. But again, for the 27-28, if I need, I don't have. So therefore, Odisha, we will be ready. So looking to the India development, looking to the infra development, looking to the 100 smart city development taken, you know very well, in Andhra Pradesh, Amravati project which was shut, now which is now started and fast growing as a city separately. So the demand has grown. Odisha, now you see the Bihar, some of the people are approaching from Bihar that you come there, we need pipes, so we can take supply from our Kolkata plant, we can make supply from our Rajasthan plant. So lot of requirement is coming. So I am very sure as per PE pipe business, growth will be more than 20 to 25%. But yes, capacity for 26-27 available. We keeping ourselves ready for 27-28 and the later period.
Okay. Sure, sir. Thank you so much.
Yeah.
Thank you.
Thank you, sir. The next question is from the line of Vishwinder Singh from Prudent Equity. Please go ahead.
Hi, sir. Am I audible?
Yes.
Sir, I have a couple of questions related to TPL Plastic. So, can you share what is the expected capacity to be added from the Lote Parshuram plant?
Yeah. You know that if you have gone through the TPL Plastic working, I think TPL has also grown more than 25%. They have also the PET growth of 25%. There is my 75% subsidiary. They have a current plant in Silvassa, Bhuj, Ratlam, Vizag. They have a full plants available in Dahej. Latest fully automatic plant for IBC is there. Now, but they are the mostly in the packaging products only. So this Lote Parshuram, TPL is coming with the packaging product where they are going to investment of 30 to 35 crores. So they can have a revenue of more than 100 crores in a 3 years time. The plant will be completed in the financial year 26-27 so that they can plant will be completed and 27 onwards the plant will be ready for that area. So currently I can say that TPL Plastic contribute to the Time Technoplast 8% or 9% of the total revenue. The revenue in the range of estimated revenue for financial year 25-26 is around 450 crores. And that company certainly looking to their growth plan, looking to their product, looking to the location where they are, they will grow more than 20% annually. And I am glad to tell you, their ROC is also more than us. Our ROC is 20%, we are doing this year in 25-26, but they have a more than 22% ROC.
Okay, sir. Another question on the utilization. So, on a consolidated basis and for TPL Plastic, can you share the utilization?
because packaging product is a different.
Okay.
Consolidation-wise, I can say if the capacity utilization, IBC, they are almost doing 80% capacity utilization with plant set up last year. Silvassa, almost 75%. They can say Vizag, around 70%. Bhuj, maybe 65%. Because company put up the plant at the new location when the break-even is there. And company break-even comes when the capacity utilization is 50%. Above 50%, you have a contribution, positive contribution from that plant.
Okay. Just last question on the solar power. So in the filing that was posted yesterday, it was mentioned that the company plans to shift on 75% to solar energy.
Yes, so you are right.
So, and 4 crore of annual savings would be there. So by when can we expect such savings, sir?
Oh, I think you have not heard what I have explained clearly. I told you as a group company, I have a TPL time, my subsidiary can put together. We have an annual requirement of 15 crores units in a year. And if company is growing 15%, so 15 crores, 15% every year growth will be there. But again, 15 crores unit, wherever the company present locations, like in Daman, Silvassa, Gujarat, Uttarakhand, everywhere company is a plant. But yes, currently, we have availability, we have seen the solar power available is Karnataka, Uttarakhand, Tamil Nadu, Gujarat and Maharashtra. Karnataka benefit last year started where company is already getting benefit of 2 crores annualized. Gujarat, I have explained that this month means February benefit have started. In Gujarat area, the company consumption is 4 crores units. So 2 rupees 50 paisa per unit saving will give the saving of 10 crores rupees from next year onwards. Company has made an investment equivalent to 1 year benefit. 10 crores equity investment, all companies put together. So 10 crore benefit will come first year. That the 10 crores which investment is there is by way of investment, equity investment, not any expenses. But the income will come straight saving in the power cost. And then benefit will get continuous for the next 15 years.
Okay, sir.
So Gujarat already started, Maharashtra policy is already there, but because of some government has delayed clearance of the policy, what latest I heard yesterday in my board meeting, now Maharashtra is cleared, so we are quite hopeful March benefit should also come in the operational, because we have an operation in Maharashtra, existing operation in subsidiary and joint venture company in Mahad. We have a unit in Pain, but as the Lotte TPL plastic is coming up in Lotte, that company will also have a benefit of solar power. So that company unit will come, by that time this benefit will also be made available.
Okay, sir. Thank you, sir.
Yeah.
Thank you, sir. The next question is from the line of Prakash Kapadia from Kapadia Financial Services. Please go ahead.
Thank you for the opportunity.
Yeah,
couple of questions. Thank you for the opportunity. I was saying congrats for the 20% ROC target. You are ahead of expectations, so that's a very good sign.
नहीं सर, टारगेट ऐसा है ना प्रकाश जी, हर चीज का टारगेट होना चाहिए. ये टारगेट 4 साल पहले रखा था, 14, 16, 18, 20. 20 होने के बाद आगे का टारगेट रखेंगे तो ही होगा कि 22, 24, 26, 28.
बिल्कुल, वेरी वेरी गुड.
डेट फ्री हो गए तो टारगेट होगा. फिर आपका पे आउट रेशियो, अभी आज 15% पे आउट रेशियो है, डिविडेंड पे आउट, ठीक है, अर्निंग का. अब जैसे डिविडेंड की आपकी पे आउट अगर 100-150 करोड़ से हर साल बढ़ेगी, तो पे आउट रेशियो ऑल्सो विल बी पैरेलली इंक्रीजिंग.
एब्सोल्युटली.
And again, as promoters are holding 48%, 52% is the other investors. And I'm glad to tell you today your company is having more than 1,53,000 shareholders of the company.
Wow.
Like 4 years back, company had a 25,000 shareholders only. And another thing I'm glad to tell you today, your company equity owned by 15% overseas investors, FIIs all put together, and 15% mutual fund.
That's very good to know.
And only 20% is more than 1,50,000 high net worth and other retail shareholders. Very widely holding is there.
Held by, absolutely.
Held by, yes.
So, but by the consolidation you were talking about, manufacturing units now.
Yes.
Whereas I remember there are 50 units across the world, and 33 are in India. So the consolidation will happen in India only, is what I'm guessing.
No. Overseas, no need to consolidation. Overseas, I'm very clear.
Okay.
For example, I'm in MENA region. I have a plant in Sharjah 1. I have a plant in Bahrain. I have a plant in Saudi. I have a plant in 4 plants are there. That is going to be continued. As far as MENA region, Southeast Asia is concerned, we have a 3 plant in Thailand. Different continents is there all over Thailand. 3 plant is going to be continued. In then Taiwan, Malaysia, Indonesia, Vietnam, one plant is going to be continued. USA, 4 plants were there. 5th plant, Georgia, already started 6 months back. Consolidation is there. Nothing to do. As far as consolidation of the facilities in India is concerned, you know that we have started in India operation 30 years back. Now I have a plant in Silvassa, 3 plants. I have a 2 plant in Daman. So I thought, why to have a 4 or 5 plants there? I do a bigger plant, I can consolidate. For example, 3 machines at one location, large blow molding. Another plant is 3 machines. So we thought, why we should not have 8 machines at one place only? So I can accumulate, I can have a material common, I have a material supply units common, I have a convert system common. I can utilize the manpower effectively for the special product, special people. So that kind of the process is on. That I call as the consolidation of facilities and the consolidation of products.
Understood. That's helpful.
For example, I'm telling you, I had a plant in Jambusar, okay? Now, I had a plant in Ahmedabad also. As I mentioned to you, I have allotted land of 13,000 square meter in Thanan 2 area. You know, Thanan 2 area is a very automotive industrial area. I got allotment of land from government. Now, I no need to have my plant in Jambusar because I know the new highway is coming. From Baroda to Ahmedabad, it's a 2-hour journey now. The new highways which is connected. So why I should have a 2 plant? Why I should have a 2 administrative cost? Why I should have a 2 commercial manager? Why I should have a 2 quality manager? I can have a bigger plant, so I can reduce my administrative cost. I know the labor cost variance will be different. Based on my requirement, I will hire the labor, and that also. When you are putting the new plant, from day one you do the automation, you will reduce the manpower. That's the objective.
And sir, based on 9-month numbers and the entire initiatives which you talked about, right from the debt reduction, composite scale, increasing share of value-added products, the inorganic should get closed very soon. So based on this, the profit growth should be at least 25% over the next 2 years. Is that the right direction I'm thinking?
Yes, you see that. When my growth is 13 to 14% volume growth, you will see the EBITDA growth at 18%. You will see the paid growth of 25%. Now, paid growth will be further more because after EBITDA interest cost is there, which I mentioned to you. One point of time, my 90 crores was the interest cost, which now going to be reduced to 25 to 30 crores because company is a debt-free company. And the payout ratio will continue. So definitely, the paid is going to be more than the volume growth.
Understood. Look forward to that journey, sir. Thank you.
Of course, 3 years, clear visibility is there because 3 years plan for international and the India business. Consolidation facilities is already paper layout, plan already discussed, board with the approval is there.
Right.
You see in my earning presentation, we have mentioned what are the growth drivers for the revenue and what are the growth drivers for the margin.
Absolutely, sir. That's a very helpful insight. Look forward to seeing you after annual results. Thank you so much for the answers. Thank you.
Yeah.
Thank you, sir. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yeah, Deepak.
I just wanted to check on the debt side. You mentioned we have a clear visibility of being debt free. Current debt stands around. That's the gross debt, 266 crores that you mentioned.
Yeah. It mentioned because you see the last year it was around more than 680 crores. So I got the QIP amount have been paid, and another identified QIP amount have been kept separately for the expansion, for the general corporate purpose, for the automation that have been kept separately.
Correct. So what was the target? I mean, by when we are looking to be debt free?
Next 6 months. Very clear.
Next 6 months. So ideally, I mean, whatever interest cost you are mentioning of 25 to 30 crores.
That I don't count the interest cost. I can say it's the financial cost. it's a document, I'm doing export, I'm doing imports, so always some will be the minimum document charges. Another thing, when I'm doing the composite products and certain government company contract, almost we do in my revenue of this packaging business 2,000 crores, 800 crores composite product, 3,000 crore revenue. Almost we do government business through government company, maybe around 1,200 crores. Now we'll have to give the performance guarantee, maybe repeat 2 years or 3 years, some performance guarantee. Okay. So that guarantee cost, every bank has a bank guarantee charges. They charge 1% or 1.5% annualized. And if I give you the 2 years guarantee, so that documentation cost, that will be there. That is not the exact cost, I can tell you. So 25 to 30 crores is going to be continuing nature of the utilization of the non-fund facilities. Hello?
Yes.
Yeah. Non-fund facilities, documentation charges, import charges, because we do the import 60% document imports. So that only will continue. Otherwise, around 607 crores which company were utilizing earlier, if average cost of 9%, so that 60 crores will go away.
Correct. And this will be visible in FY28. I mean, assuming next 6 to 9 months you become debt free.
Before March 27.
Okay.
Not.
Okay, understood.
Next year, of course.
Got it. All other my queries have been answered. Yeah, that's it from my
side. Thank you.
Thank you so much and all the very best.
Yeah, thank you.
Thank you, sir. Ladies and gentlemen, due to interest of time, we will take this as the last question for today. I would now like to hand the conference over to Mr. Bharat Vagheria for closing comments.
So once again, I would like to thank you, my valued investor, having confidence in the management, and management assure you whatever commitment and guidance is giving, we will try our best to achieve that. Very well, in the last 18 months, challenging period for everybody. But in spite of that, company has saved and achieved the growth because the company has a risk distributed geographically, as presence in the 11 countries. Company has a various segment which have users are different. So if one sector is down, company can get the revenue from the other sector. So that's the management policy. Always have a de-risk by way of geographically and product wise. And company, as already mentioned and everybody knows, is a professionally managed company and every company has more than 4,000 people working in India and overseas. And each of the department is headed by the experienced professional people who have more than 20, 25, 30 years with the company. If you will see, in my average age of the people in the company is around 35 to 36 years, because most of the people have grown with the company and they are continuing with the company. So again, thanks to my all valued investors to having a patience and listening to our management commentary for quarter on quarter, and company management will continue to give updates and insight time to time whichever is available with the company. Thank you very much.
Thank you, sir. On behalf of Kaviraj Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Yeah, thank you very much.